another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So today we'll be looking at the current events, especially what happened in the markets today. And once we cover that, then we will go through the technical analysis to try and understand the key chart patterns before we go ahead and trade the London as well as the New York session. So before I start, I will begin with a mic test. So if you can hear me clearly, kindly type hi on the live comment section, and these will confirm that everything is working just fine. So hello, Lamik, hello, Smith. Thank you guys for joining. So as usual, we begin with a disclaimer. This is not investment advice. It's not a recommendation to trade. It's purely educational. So you always have to do your own due diligence and, of course, practice proper risk management. So that being said, hello, Mike, Manthi, and Smith. Thank you guys for joining. So let's get things started. So first things first, I'll be looking at a report by Yahoo Finance. And this is concerning yesterday's inflation that came in higher than expected at 3.5% year-over-year for the US. So consumer prices increased by 0.4% month-over-month in March, pushing the year-over-year inflation to 3.5%, which was higher than the expected 3.4%, and of course higher than the previous number, which was 3.2%. So according to the latest consumer price index report, both prints were hotter than economists had been expecting. The report caused futures to plummet, and for many traders, take a June rate cut from the Federal Reserve off the table. So we all know what has been happening over the last couple of months. I think I've been saying this enough that based on what we are seeing with inflation, jumping from 3.1 to 3.2 and now 3.5%, I think the Fed has a much tougher job in addressing inflation than it had expected. So the bets that were there at the beginning of the year that we would have at least 5 rate cuts this year have really gone down to 3 and then to 2, and potentially in the next meeting, maybe the bets will drop to 1 expected cut or even 0. So judging from the CME Fed Tool, which basically measures the probability of the Fed cutting or hiking interest rates based on CME 30-day Fed funds futures, you'll notice that as per today, the 96.1% probability that the Fed will not be cutting interest rates. And if you move to the next meeting after May, this will be on June 12th, there's an 83% probability that the Fed will still hold interest rates steady at the current level, which is a range between 5.25% and 5.50%. So this means that the expectations for a Fed rate cut have been moved to July, but then it's still a very small percentage or probability of 35.7%, whereas the majority of the market is betting on 60% or 59% that the Fed will still hold rates steady at the current level, which pushes this to September. So on September, this is where we have the highest probability that the Fed may actually consider cutting rates. And with this in mind, if the potential for rate cuts has moved all the way to September, then it makes US treasuries very attractive. So what this means is that a lot of investors will find it like a really good opportunity to put some money in US treasuries at the current rates, which is above 5% for short-term treasuries. In this case, expecting to hold for the next 3 to 6 months. So what this means is that with this expectation, it means that the Fed may continue holding rates higher for longer. And as a result, we might continue seeing a very strong dollar in the market. So As long as we are expecting to see a very strong dollar in the market, then there's major trends, there's major opportunities to be observed. On the other hand, for equities, that is the S&P 500, the Nasdaq, and the Dow Jones, they would largely benefit from lower interest rates. So if interest rates were to be cut, then the three indices would benefit and make a strong rally. But now that we are seeing interest rates staying higher for longer, we are beginning to see what looks like a potential stock market correction happening. So that explains why we saw the three indices dropping yesterday after the US CPI news. So still on the economic calendar, we know that there was also a decision by the Reserve Bank of New Zealand where they decided to continue holding interest rates at 5.50%. So that led to a strengthening of the New Zealand dollar before it weakened after the CPI news. So the Bank of Canada will was also making a decision yesterday. So they decided to hold interest rates at 5%, and now all focus is shifting to the main refinancing rate or the interest rate decision by the ECB or the European Central Bank, where it's expected to hold interest rates at 4.5% for the day. So if the ECB decides to hold interest rates steady at 4.5%, then all focus will move or shift to the ECB press conference. So we expect a very volatile day for the euro, and of course, producer price index for the US is expected to increase volatility for US dollar pairs. So that being said, I think it's within reason now that we shift into the economic calendar, into the technical analysis, and go through a couple of charts before we end the session. So if you have any questions, just feel free to drop them in the live comment section, and I'll be responding to those questions towards the end. So hello, Simon. Hello, Smith. Thank you guys for joining, and thank you for your engagement in the comment section. And of course, remember to like the video. This really helps in getting more people to participate and enjoy the content that we are creating. So let's get on to the next part of the presentation today, and this is the technical analysis part. So from the technicals, this is what we are looking at. I'll be beginning with the dollar index. So based on the CPI news yesterday, this was the immediate reaction. So the dollar index made a big jump higher and broke a key level resistance, and now we are trading above that. So even from the forward chart, you can notice that we managed to break this resistance and trade higher. So today, after the market opened, there was a slight jump higher for the dollar index before it reversed, but we are still very close to the opening price for the day. So with this in mind, if you look at other key major pairs, I believe the key highlight for the day will be the USD JPY currency pair. So for years, we know that the USD JPY pair has been holding this level, and this level has acted as resistance. If you go to the weekly chart, you'll notice that we had this high in 2022. Then 2023, it was still the same high. And now this year, we have managed to break above that resistance. So I discussed this earlier in the week, mentioning that the 3-week range in USD JPY has the potential probability of breaking towards the upper side. So in this case, we know that the Bank of Japan hiked interest rates from negative 0.1% to positive 0.1%, but then they chose to continue with quantitative easing, which basically means printing more money. And on the other hand, the US has maintained interest rates high at 5.25 to 5.50%. And these rates may have to stay higher for longer because the US is not winning the inflation battle. So with inflation still at 3.5%, we expect higher rates for a longer period of time. And as a result, the key discrepancy between interest rates of Japan and the US are driving the USD JPY higher. So after the big spike yesterday, we had this pullback happening earlier in the session today. But then in the Tokyo session, we saw the market recovering. And now as we enter the London session, I expect the market to continue with this bullish trajectory. So this may as well be the key highlight asset to trade for the day, where we expect some continued bullish momentum, with the only concern in this market being the potential for the Bank of Japan intervening in the forex market. So I expect some further bullish momentum, and as this bullish momentum continues, you have to be very careful with your stops, because the Bank of Japan could potentially intervene in the currency market at any time, because the exchange rate is not going their way. So in simple terms, the Japanese yen is losing too much of the dollar, and the Bank of Japan may have to react to this. But as per now, the sentiment remains bullish for USD JPY. So this was a much awaited breakout, and once it happened, now we have a direction to trade for USD JPY. So for other pairs, including Euro USD, there was a big drop. We got to a target here, and now immediately the price got to this support. You can see the strong bounce, which implies that we could be seeing the euro making a recovery for the day, especially ahead of the ECB press conference. So it may not make as much sense to trade the Euro USD ahead of the ECB. So I would rather wait and see what the ECB presents during the ECB press conference, digest that news before engaging into a position. On the other hand, we have the pound USD making a strong bounce from yesterday's sell-off. So it's trying to make a recovery. And if you look at this area here, which was acting as support during this range, then there's a good chance that the market will get to this area, 1.25752. So we'll be observing this area to see if there's a continuation or a reversal here. So we know that there's a potential that the market now, after getting to this area, making a strong rally towards this resistance around 1.26675, or the market finding resistance here and continuing with yesterday's momentum. So this is the area that we'll be observing to see and observe the price action behind it. So for New Zealand USD, this is what we had yesterday. So notice from the forward chart that it is a long-term bearish momentum. And after the market got to this area and there was news, there was a big drop, but now the market is attempting to make a recovery. So this recovery may not last for long. I expect the dollar to continue strengthening against the New Zealand dollar. So now we observe for signs of bearish entry, especially along this area here. So we don't have much happening here. It's more of a slow climb, or what in the markets we describe as the wall of worry. So in this case, there's a wall of worry that the market may continue with this bearish momentum, but then that there's no evidence for that. So we just continue observing the price to see evidence of sellers entering this market. So for the dollar against the Swiss franc, of course, when the dollar strengthens, and of course the Swiss National Bank went for the rate cut, the surprise rate cut, that was 3 weeks ago, and now this led to a big pump here with the dollar gaining against the Swiss franc. And now after the CPI inflation, we saw the dollar continuing to strengthen. So after the pullback that happened towards midnight, now we are seeing a continuation. And as we enter the London session, I expect a continuation of the same momentum. So we will be observing this high that we saw yesterday to see if the market will be breaking this high and moving higher. So all bets are seemingly bullish for the USD CHF. For USD CAD, there was a strong rally here. So despite the market being on a cycle, moving towards the lower side, this big pump was very important. And after the market broke this resistance, there was a pullback, and now the market is retesting this trend line to potentially continue the same journey or the same trend direction. So in this case, as we all know, whenever the market breaks major resistance, if we see a book pattern, that is the market going back towards the resistance area, then the probability for a bounce can be very exciting for a trader, mainly because there could be some continuation opportunities here. So that's the idea behind trading USD CAD for the day: a breakout, retest, and continuation. So gold has been the biggest bull for the year. So we have seen a very strong bullish progression. But then after yesterday's news, you'll notice that gold took a step backwards. Then today during the Sydney session, we saw gold attempting to make a recovery. Then during the Tokyo session, market pulled back downwards. So in this case, what we are looking at here, and I'm trying to clear anything that might clog your mind here. So this is what we are looking at. This support here versus this support means that the market is almost having bottoms that are moving sideways. Whereas if you consider the highs, they seem to be going downwards. So it's more of a consolidation. So if you observe the last 3 days, we can generally agree that this is the generation in the price of gold. So whenever you have such a scenario, then your interest is on either of these areas here. So you want to participate trading gold if the price gets to this area or to this area. So the likelihood in this scenario seems like the market will go down, get to this point, and potentially bounce from this area and move higher, or even break towards the lower side. So the key decision point will be on this area, and if you want a specific price level, this is around 2,320.77. So it's also an area that has experienced several bounces. So notice how price bounced from this area, also bounced from this area, and now there's a potential that the price will also bounce from this area. So the breakout is also possible, but this is the key decision point of 2,320. So all you do, you basically watch the price and wait to see whether there's entry of buyers or whether price accelerates downwards. So US equity indices are now forming this sequence of momentum, where from this high to the next high to the next high, it's also indicating lower highs. And if you look at the lows from this low to the next low and the next low, then we have a bearish kind of setup. So this indicates that the bullish trend has weakened. So a major trend line was broken here, and we discussed this earlier in the week. So after the big breakout, pulled back, retested, and then continued in the same direction. So in this case, it seems more of a bearish market. So from the 1 hour chart, then we continue looking for short selling positions, and that's for the Dow Jones. So if you go to the NASDAQ and go to a chart, this is how it looks like. So apologies for these illustrations here. So try and remove all these. And now we observe this one this way. So we were in this bullish momentum. Market formed a high that was almost equal as the previous one, indicating some form of weakness. Eventually broke the lower trend line, pulled back, got even to the upper trend line here, and then made a break yet again. So now that we are seeing price going back upwards, it basically implies that this market is potentially now moving downwards because it's forming lower highs. And if you focus on the lows, they're also getting lower. So if I zoom here and you look at these lows every day, every week, they're just getting lower, though yesterday we didn't break to a new low. So in this case, I expect that with the inflation remaining high and interest rates remaining high, then we might see some more correction in the NASDAQ. For the S&P 500, we had this range holding on pretty well. And then the market got back to the upper trend line, formed a shooting star, and then made a sharp drop during the news yesterday. And since then, all we have been seeing here is noise. So during this period, let's say after the news, this is a lot of noise. up candle, down candle, up candle, down candle. So in this case, I would say it's more of within the wall of worry. So I'll be observing this area to see if there's a sudden burst of momentum, potentially towards the downside, looking for short selling opportunities. So from the 1 hour chart, this is how it looks like. And we already know that this has become a trend now. The market is forming lower highs. And from the lows side, we can see that looks like, and a major trend line has already been broken for all the SP 500 traders in the house. So after looking at this support area, the long-term trend line, and seeing the big break, retest, a couple of retests of the same area, and then a big break downwards, then the overall expectation is that we continue seeing some further bearish momentum. So for UK oil or Brent oil, this is what we are looking at. A very strong market where every time we have this kind of pullbacks, buyers come in and push prices higher. So the most recent one being what we have seen here. So a big drop followed by a bounce, then another drop followed by a bounce. And in this case, I expect some form of continuation. This bottom, and then the next bottom. Then you can see that it's an area where there's some form of confluence. So in this area, you'll notice the number of times the market has bounced from this area. And also, if you're observing this high compared with this high and then this high, then we know that the market has already broken towards the upper side. And after the breakout yesterday, today there has been a small pullback, and now it seems more of a continuation. So the idea I'm talking about is the market making this breakout, pulling back for a while. This was earlier in the morning, now a continuation of the same. So in this case, we expect the market to rally towards the top of the pattern, and the top of the pattern is just right here at $91.5 per barrel. So for crude oil, there's an expectation that the prices continue going higher. And of course, for Bitcoin, what we have seen is a strong momentum since yesterday evening. So while the stocks were selling, Bitcoin managed to make a strong recovery. And today, that has continued. And we are potentially on the verge of retesting the previous high, which is around $72,800 per Bitcoin. So I expect the bullish momentum to continue for the day. So the European stock market indices have attempted to make a recovery, but then the more they get closer to the upper trend line, the more we see bears entering these markets and pushing prices lower. So yesterday and on Monday, we talked about the market finding resistance here and dropping. So yesterday, the same pattern was repeated, and today, the similar thing could be happening. Market gets the resistance and drops the same way. So for the French 40 index, it's the same story. So I'll try and zoom it. On Monday, market attempts to go up, finds resistance, drops. Tuesday, the same thing, drops. Wednesday, drops. And this was Monday, Tuesday, Wednesday, now Thursday. And if you go to the FTSE UK 100 index, then our head and shoulder pattern didn't play out as expected. So the market ended up making a 3-day rally, but then didn't quite get to the previous high, which is also in and of itself a sign of weakness in this bullish trend. So from what we are seeing here in the last couple of days, it seems more likely that the market is finding resistance on that trend line and support on this trend line. And in the most recent swing, the market didn't manage to form a new all-time high. So what we are looking at here is the market now making a rally earlier in the day, and now a reversal which might potentially lead to a breakout towards the lower side. So if I'm short on this trade, I will be targeting this area as an exit. But then if I'm out of the trade, then I would be very interested in seeing what happens here with a potential drop towards the base of this pattern here. So the base of the pattern is not there. It's all the way down here. So 7,885. So that's it for the day. I will be checking on the questions as we approach the end of the presentation. Hello, J Squad. Hello, Smith. So, Ernest Shayo, I would like to ask, what did yesterday's CPI meant to gold? Will there be bearish move or just maintaining bullish? So, on one side, I'll talk about the two assets. So, there has been some crazy, insane demand for gold. And this has been happening over time for the last 2 years. And this is leading to an acceleration of prices higher. So there's a lot of geopolitical risks emanating from Russia, Ukraine, Israel, Hamas, a potential hit on Israel by Iran that so far remains a threat. Investors are trying to prepare by buying safe haven assets. And as a result, what we are seeing in the markets right now is a lot of investors going for gold. So there's very high demand for gold. But then on the dollar side, there's also the expectation that there will be rate cuts in the year. But then those expectations are going away. People are beginning to price in the potential that inflation has remained higher for longer and interest rates might have to stay higher for longer. So yes, on one side, we have a very strong dollar, which is leading to lower gold prices. But then I expect to see some form of recovery. So for gold, I remain pretty bullish. So next question is from Mike. So if I went to the FX Pesa, would I be trained on how to trade the supply and demand? Because that's the problem I'm having now. Yes, this depends on where you are. If you're in Nairobi, the classes are no longer continuing. But if you're in Kitengela, Thika, Nakuru, Eldoret, all our offices are open and you can easily join the academy. It's free of charge and you'll get to learn how to trade supply as well as demand zones. How do you use the 15 minutes to find entries? It's more about understanding the candlesticks. I think I've discussed this before. So if you're trying to learn about finding entries on the 15 minutes chart, I've covered that on the Novice to Pro series. It's available on this very channel. So after this, you can go to the Novice to Pro course. It's a 10-episode course designed to help you transition from a complete beginner to a pro-level trader. So how do I access FX Pesa AI Automated Economic Calendar? Just download the app. That is the Equity app. Equity with an I. UITI. So once you download the app, you'll be able to access all those tools. You can also access it via the website. So you just log into your FX Pesa platform. And once you go to fxpesa.com, you will have access to all the Equity tools. So looking at the next question, I believe that was the last question for the day. So thank you very much, everyone. If you'd like to open a trading account, find the links below on the video. And of course, we have 2 new episodes coming up on both the Bullish Banter podcast as well as the Financially Incorrect podcast. So make sure to check them out on your favorite podcast platforms. And of course, they're also available on the FX Pesa YouTube channel. And I would like to announce that the Bullish Banter podcast has now shifted from audio only to video. So now you'll be able to interact with us, visualize the charts and the content we're talking about. So hopefully this adds value to everyone. So thank you very much, guys. Thank you for your time. Remember to like and share the video. Hope to see you on the next session.